Hi, this is Dave and welcome to the weekly market recap. I'm recording this video on Saturday, November the 17th, closing out the week for Friday, November the 16th, 2012. So interesting action in the markets this week. Let's start out as we usually do. We're looking at the Dow Futures, and if you want to look at similar instruments, you can look at the DIA ETF, the Diamonds ETF, or you can look at the Dow indexes. So essentially what we're looking at here is we've got some key things going on here where we have this this key low and we have this key high in place right in and around this level. Okay, so we've got a key low and we've got a key high. So let's take a look at where the key fib levels come in. I'm just going to delete this and redraw them. Remove. So what we're doing is we're looking at this tool here, Fibonacci price retracement lines, and we're going to take it from, okay, might be a little bit too early in the morning for this, so okay, here we go. So here's the major low, here's the major high here, somewhere around this what looks sort of like a triple top. And as you can see here, this is a very key level from a Fibonacci perspective. Now, I use fibs in a lot of my technical analysis work, usually looking at these key levels for retracement. So these are the key levels. So in last week's video, we were talking about a test of 12,700, which was the 50% retracement, with a potential test of 12,500. Well, we had that, and we even slipped through it. We slipped through it a little bit throughout the day, and it looked like on Thursday, throughout the day on Thursday and Friday, and it looked like we might, just collapse, just collapse here. But I wasn't that interested in the short side for the simple reason that, this 12,500 level is a key level. In fact, let's go over to the charts that we were looking at from last week, and I believe I just have it in here as okay. Here's the chart we were looking at last week. TradeStation changes the charts. It saves all the analysis work on the charts based on the symbol that you've entered. So it's the same contract, but I'm just looking at the @YM, which is a continuous contract of the Dow Futures. So if you look at this, we were looking at this 12,500 level, which was the 618 as a potential support area. We had this green line on the chart going back for quite a while. The next major support level on the chart is 12,300. So essentially the way I'm looking at this market is this is a major support level, kind of like the line in the sand between long and short from a Fibonacci perspective, and we've really come down here quite a bit over the last week or so. And you can see the action on Friday. Let me just zoom in. The action on Friday was essentially very bullish. We closed out the day on the dead highs. We actually pushed to new highs, and I'm just going to kind of zoom in here. You can see this one candle here. This one candle here. On Friday, we came down, we tested these lows from Thursday, we pushed a little bit lower, and then we pushed and actually closed right at the highs, and we pushed above the highs right at the end of the day. So this kind of action, this type of candle is essentially indicative of accumulation, where you can see here we pushed below Thursday's lows, and then we came all the way back up and we closed right at the high. So this is really telling me or indicating to me that we're finding support in and around these levels, and some of the bigger players jumped on this move and pushed it higher. And I'll get into how I knew that these were some of the bigger players getting in here. But essentially, this to me looks like we may be potentially holding this support area. Now, when I say we may be potentially holding the support area, what I'm looking for at this point is at minimum a bounce. So I'm looking for a bounce maybe into the 8-period exponential moving average, which is about 100 or 200 points higher in the Dow, potentially the 21 period moving average right in around this line, potentially this white falling dynamic line, and potentially into this somewhere into that trend line. So I've got another indicator that I've added on the charts just to kind of illustrate this a little bit better from a relative perspective. So we're looking at stochastics here. So the white line, the thick white line here is a fast stochastic, and the white and the thinner white and red lines are slow stochastics. So if we look at it from that perspective, using this indicator kind of as a guide, you can see we're really oversold here. We're really oversold below this green line here, which I believe this is at set to 30. But you can see we really bottomed here. And if you look back, going back, traditionally when the stochastics are this bottomed out, you get at least at minimum, like over here, you get at minimum a bounce. Okay. Over here, it bottomed out. You get at minimum a bounce. Over here, it bottomed out. You can't see it on the chart, but you essentially got a bounce. So we're essentially at this same situation here. You can see it here on the chart here, and we got a bounce. Okay, so that's kind of what I'm expecting at this point in time. You can see that these fast stochastics have been buried here for a while, which is indicative of trending action, which we've had really nice trending action to the downside. In fact, this pen should really be red. Let's see here. So we've had this action here, indicative of a pretty strong trend. When these stochastics get buried on one side or the other, because they can stay overbought or oversold for significant periods of time. Now what I'm really looking at here is with the fast stochastic, which is this thicker white line, you can see that it kind of bottomed and now it's pushing higher above the 30 line. So that to me is indicative that we're going to get a bounce. So when you take this into consideration here, when you take this into consideration, and then you take these factors into consideration, where you've got a major support level that it hasn't cleanly broken. It slipped through it, but it hasn't cleanly broken, and it's closed back above it, and then you have a close close to the high of the day. That to me is indicative that we're probably going to get a bounce. Now, aside from those factors, you have the fact that we really are extended here to the downside. And no market goes straight down or straight up for that matter, forever. So at this point, I think we're looking at a potential swing point, and at minimum, I think we're looking for some type of a bounce into some of these higher levels. Okay, so let's take a look at the same market but on a 1-minute chart. So this is the price action. Here's the 9:30 cash session open. Here where that dotted line is, this is 9:30 a.m. Eastern Standard Time, and that's some terrible writing, I apologize. So what you can see here is this is, when you look at it from a 1-minute chart, this is the entire day on Friday, and what you can see here is you had this low here with fairly, relatively high volume. If you look at, the average volume is somewhere down and around that area, and look at the volume coming in at this low. And then this was an interesting point. I actually traded and I got in with a long position on this low, and it was simply a retest of this low. So what I was looking at was we had a high volume area here. I wanted to buy this low here. I was actually short. I was short in and around this area. I got out around here, and then I placed an order to buy with a retest of that low. Those were real trades that I took on Friday. Now, I got out because my risk tolerance on Fridays are usually lower. I took a trade right here. I took only a little bit of heat on it. I got out somewhere around there. Okay, so I took a really small, almost a scalp trade there. And then what happened was my real target would have been normally on a normal day right around there, because we had a down trending line, and I was looking at potential resistance in there. But then what you can see is this is how I knew how I'm just picking up the conversation from the last chart, how I knew that professionals and the bigger players were getting on this move and supporting these levels. Look at the volume that came in when we broke, there was actually a trend line in here. I'm going to spend a little bit of time on this because this is a really good learning opportunity for some of the members of our meetup groups and stuff looking at technical analysis. So this is essentially what I was looking at here. You had a low in place here. You had this downtrend line, and when we came back up and tested this trend line and broke through it, and then this crazy volume came in, that is indicative of the bigger players getting on board. You're looking at 1,600, almost 2,000 contracts in a 1 minute bar on the Dow. That is, that's a lot of volume for the Dow. So you can see that the average volume is somewhere down here, and when you see these huge areas, and then you've got these crazy wide range bars, and the move from this low to this high was almost 100 Dow points. In a relatively short period of time. So when you see this kind of volume coming in and you see this kind of price action, these are the big players, the professionals moving this market. These aren't the small guys that are trading, single lots or even, 10 lot traders or even 100 lot traders. These are big, institutional type traders coming in and pushing the market higher. So then you can see here, you had a normal retracement from here to here. I actually took a scalp trade and I scratched this move here, but I got in long on this move here because this was simply, if you look at this was a 61.8% retracement of this low, roughly this low to this high. So here was an area here that I was interested in, getting on the long side. I actually took a trade there, but because my risk tolerance was very low, I took a trade right there and it slipped through. It didn't hit my stop, and then it came back up and I scratched the trade. I sort of chickened out of the trade because my risk tolerance on Fridays are usually lower than other days. So I wasn't really willing to take a lot of risk going into Friday. I don't like closing out the day on a losing note. So this was another area that I took a trade and I scratched it out for break even, and unfortunately I didn't stay with this long trade, and you can see here it pushed, and it closed at new high. So here was the previous high of this major crazy move with all this volume, and you can see at the end of the day, you see here how we pushed above these highs. So this is really telling me, this is how I really know that maybe the short-term down move is over, and maybe we're going to get a bounce going into next week, coupling that with, okay, and this is really key. This is why I use multi-time frame analysis. Coupling that with, and let's just jump over to this screen here, coupling that with this key level on the daily chart that we were just looking at in that action. So you can see this one bar is representative of that entire chart, 1 minute chart we were just looking at. So when you take into consideration, the higher time frame on the daily chart, which trumps all, the lower time frame charts, and then you see that action again on, so there's the daily chart with the major key support level at 12,500 here, and then you look at the 1 minute chart and you can see we closed out right at the highs. That's really indicative of some bigger players getting in the market. You can even see some volume coming in at the end of the day, pushing it higher. So that's really kind of what I'm looking at for at least for the Dow. We can take a look at some of the sister indices. Just going back over here. Let me just pause the video for a second. Okay, so here is, I just paused the video for a second. Here is the S&P future, or you could look at the SPY ETF, which trades like a stock and is optionable as well. So if you look at this, you can see, you kind of had the same situation with the stochastics where they're breaking back above the 30 and they're pushing higher. The fast stochastic and the slow stochastic is buried here. Looks like it's trying to cross over, but then you can also see the same kind of price action that took place. At the end of the day, you came very close to the 61.8% retracement from this major low, to these major highs. So this is kind of telling the same story in the S&P. Now, if we take a look at the Nasdaq. the Nasdaq actually broke the 618 in and around these levels here, and it pushed lower. So the Nasdaq was much weaker than the other stock indices from a relative, standpoint, from a relative standpoint of its relative lows to its relative highs. So you can see here it trended, really strongly to the downside. It's really extended, and you can see the stochastics, the same situation here, where you're pushing back up. You're pushing back up on the stochastic to the high side, and if you look at the stochastic still has quite a ways to go to push back up in into the oversold territory. So if you look at this, I think we're looking at a test of some higher levels. This is a potential swing point in all the stock indices, and the question really will be, is this going to be the low? Or are we just going to push back up into resistance and then come back down through those levels to lower levels? So we won't really know until we can gauge that actual price action. I don't think these are levels that are actionable from a short perspective. I think we're looking at a bounce. To get back on the short side, what I would really like to see in all the indices is a situation like this, where we bounce into some higher levels, and then we fail those levels and come back down, through that low. So that's kind of what I would want to see. But it's not unusual to do this and then test, and then take off. So I'm going to be looking at for this potential scenario, but I'm also going to be looking for a potential scenario where we do this, push into like a resistance level, we come back down, we put in a higher low, right, and we hold. Let's say this low, we hold the low, we put in a higher low, and then that would be indicative of, if this higher low holds and then we push back through resistance, that would be indicative that maybe this level is going to hold. And in the other markets, this would be basically where the 61.8% retracement is in those respective markets. So that's kind of what I'm looking at. I'm looking at those two scenarios: a push back into resistance and then see if we'll come back down, put in a higher low, and then take off, or if we're just going to come back down, fail these levels, and push lower. So those are the two scenarios that I'm looking at. This one obviously would put me on the bear side, right? This one would put me on the bear side, and this scenario with the higher low and then pushing off back through resistance would put me on the bull side. So that's kind of what I'm looking at in the stock indices. Let's take a quick look, if that's possible, at some of the a couple of key currencies. So I'm going to take a look here at let's take a look at the dollar index. And with the dollar index last week, what we were looking at, we don't have any volume for the dollar index, but what we were looking at over the past several weeks was this kind of complex bottom breaking above, these resistance levels at this white line with a push at least into the 50% retracement. We got that. It's something that we were very close to it last week. It just kind of looked like a magnet. So it was easy to, say, it's quite possible. So the question now is whether, this is kind of an interim top and we're going to push back down into support at the 21 exponential moving average, or if we're going to push through and test, the 61.8% move of, this retracement from this high here, to this major low. So this major high, that major low, are we just going to get the 50% retracement, or are we going to push into the 61.8, or are we going to kind of pull back into support and then push into this level? So this is something that we'll just have to keep our eye on for an indication of where this is potentially going. If we look at my trending indicator, still relatively bullish. We are on the stochastics, we are fairly oversold, and you can see the fast stochastic has come off and now is sort of pushing higher a little bit here, but it's really in the middle of its range, around 56, which isn't far off from, I guess it came down and tested 50, which is the mid-range. So we are a little bit oversold here on the slow stochastic, and if we look at this scenario, I don't think this is really an actionable level. I think what you would really need to see is a push into this level, or a pullback into support. So a push into resistance or a pullback into the major support. So the 50% level is the interim resistance, and that's kind of what we're looking at there. So let's take a look at the inverse. Let's take a look at the inverse of the dollar index, which is essentially the euro, which comprises a lot of the the weighting in the dollar index. So I apologize, this chart's a little bit messy, but you can see a couple of things here. We've got that key $30 level that we've been talking about, and we have some of these levels that we had going back on the chart. These aren't new. These have been on the chart for several weeks. In the last few videos, you can see this level held $1.2672. We pushed back off into resistance. So the question will be, is this resistance going to hold at the 21 exponential moving average? And you can see this line here, if I extend it over a little bit. So here's I believe the major resistance level at this point. And the question is, are we going to get a structure like this where you've got a swing point low? Is this going to become a swing point high and then push into some of these levels down here, 50% retracement, from the major low down there, the major low to the major high up here. So that's really the question. Looking at the inverse, are we going to push it? We've hit these resistance levels. Are we going to push down here? Are we going to push down there? Are we going to hold this level? So at this point in time, I think the actionable situation would really need to, to get on the short side. I'd be looking at personally a break of $1.2672 to see if we're going to come down and test, somewhere in this zone, somewhere in these levels. So you can see here the short-term pullback in the fast stochastic, but you can see that the strangely enough the slow stochastic is really buried, and it looks like we're kind of due for a bounce. So kind of some conflicting signals there. Now these, in a trending market, these slow stochastics can stay, oversold or overbought for long periods of time, like you can see here. They can stay in that situation for long periods of time. So I'm not really sure how that's going to resolve itself. But in terms of actionable levels, I'd really be looking at, this is the major support right now. This should actually be green. This is the major support. Are we going to hold this level, or are we going to push back down through it, test some of these levels? If we hold this level and push back above here, then that's going to, kind of change the outlook substantially. So that's all I have this week. I hope it helps, and we'll look forward to seeing you at an upcoming meetup or an upcoming CSTA meeting. We had a great CSTA meeting with presenter Don Valou out at the on November the 14th in Oakville for the Oakville chapter CSTA meeting. We plan on having a great lineup of speakers. I've already lined up a speaker for January the 9th's meeting, and we're looking at lining up a speaker for December's meeting. So those take place on the second Wednesday of each month from 7 to 9 p.m. And then the active traders meetup takes place on the last Sunday of the month, so we'll be looking to line something up for that. So stay tuned for these upcoming announcements, and we'll keep you in the loop there. Good trading. Hope it helps. Have a great rest of weekend. Take care.